Good morning, good afternoon, good day. Welcome to my weekend market roundup, 18 September 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I develop. This is my email ID. You may contact me using my email ID, tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website, sagarnandi.com. YouTube channel Trading Profitably and Twitter handle Sagar Nandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems I use in my trading. They run as add-ons on the MetaStock and TradeStation platforms. That was the last slide. Let's continue with the live system. Let's first have a look at the global markets, starting with Australian index AXJO. Australian index displayed a bear release signal on this day. This is AXJO. AORD, the other Australian index, had displayed a bearish headwind in weekly chart at that time, and you can see AXJO displayed a bearish headwind in the daily chart. Since then, the weekly backdrop color has remained bearish. This week's candle is an indecisive doji candle. It closed just below the weekly trendline support. The daily is still inside a range bound by trendline resistance and trendline support. We'll avoid taking any directional trade unless it can break out of the range. Australian market is continuing in a sideways range. Next is Japan's Topix Index. Topix Index closed with a bullish backdrop but indecisive shape in the weekly chart. In the daily, it is clearly in an uptrend, far above the upper boundary line, bullish but too extended to take a new long trade. Next is China's CSI 300 Index. It was moving sideways and it is continuing to move sideways. It's inside a range. It is at the lower end of the range. If price continues to go up from the lower edge of the sideways range next week, then you may look for buy setups, especially using fine-tuned intraday charts. You may try that in individual stocks, fundamentally strong stocks, instead of trying to buy CSI 300 itself. China market is continuing in a sideways range. Next is UK's FTSE index. FTSE was in a sideways range and that is continuing. Weekly, daily, both are inside a range. And lastly, India's Nifty 50 index. Nifty 50 was the strongest of the global markets and that is continuing. It closed with a bullish shape, but in this bullish color, but indecisive shape candle in the weekly chart. Daily is bullish, however, daily has displayed the bearish headwind possible reversal signal. Therefore, if you had any long position in the Indian market, you might be cautious. That is a review of the global markets. There is no change from the previous webinar, which was Wednesday's pre-market USA time webinar. Japanese market, India market continuing in an uptrend. The other three markets, Australia, China, UK, they are continuing to be range bound. What about the USA market? Let's look at that using Q Elite on TradeStation, starting with S&P 500 ETF SPY. We have two pretty weak bearish shape and bearish color backdrop candles. Still in an uptrend in the weekly chart, it has trendline support. In the daily also, it is in an uptrend, has trendline support, multiple of them, and it pulled down from the upper boundary line to the yellow direction line. Friday's candle shape and color both are bearish. Bearish flow, bearish pressure, and very high bearish volume on Friday. And after a long time, we have above average bearish volume in weekly also. There was another above average bearish volume here. This week's bearish volume is much larger than previous week's bearish volume. Though in terms of price move, previous week and these 2 weeks are comparable, this week's volume is much more. That is, we have declining price with rapidly increasing volume. That may be a concern. However, there are trendline supports in the daily chart. Unless these are broken, it is too late to take a short trade. If you followed my webinars, you know that when SPY was near the swing high, I started taking some short trades and I had booked profit in many of them. I may review some of those trades today also. SPY continuing to be in an uptrend but pull back somewhat. Next thing to watch out for is whether price can reverse from the trend line support from the yellow direction line, or does it break the trend line support. Later on, I will also show that some of the mega caps are showing weakness. They broke below trend line support. I tweeted about that on Friday during market hours. If the mega caps continue to show weakness, then SPY may also break below trendline support. It's important to see next week whether it can bounce up as it did so many times in the past from the swing low, or does it break below trendline support. That was SPY. Let's look at Nasdaq Etf Qqq. I mentioned about the bearish headwind in QQQ right on the day it took place. It was displayed first, and since then price is coming down in the weekly chart. Two bearish shape, bearish color candles. However, price stopped right at the trendline support. This week's price drop is with much higher volume than previous week's price drop, as was the case for SPY. Still, it stopped right at the trendline support in weekly, and the daily is still in an uptrend. It has trendline support, higher high, higher low. We see next week whether price comes to trendline support and bounces up from there, or does it break below the trendline support. If you look at the momentum signals, interestingly, we have a biggest down move in 3 months after a very long time. So that is a significant bearish momentum signal to take note of. We have, after a long time, the biggest down move of 3 months. We also have bearish pocket pivot, Mobo breakout, and bearish Kahuna. Many bearish momentum signals in QQQ. Still, it's difficult to be bearish because it has trendline support in both daily and weekly nearby. There are other stocks tech stocks that we can be bearish on, but not QQQ itself. I will look at some of those tech stocks that broke down. QQQ still in an uptrend. Let's check DIA and IWM. They were moving sideways. DIA in the daily, now it has lower high and lower low. So it is not moving sideways anymore. For short-term trading purposes, DIA is in a downtrend. Are we going to short now? No. It is near the lower boundary and weekly has trend line support. So it is a bit too late to short now. If you followed my webinars, you would know that around this point, somewhere here, I had shorted DIA and I had booked profit in the short trade as well. This is currently in a downtrend, and like SPY and QQQ, DIA also came down in the weekly chart with above average volume, which was not so in the previous week, though in terms of price drop, both the weeks are comparable. In fact, the prior week dropped with a bigger price move, but with much lighter volume, and now the volume increased. That is a concern. Still, it has weekly trend line support. And let's check IWM. IWM was moving sideways and it is still moving sideways. It has daily trend line support. Price came down somewhat from the swing high and stopped at the trend line support. It has higher high. If price goes up from here, then it will create higher high, higher low. That may be a signal to buy small cap stocks. However, it is still moving sideways. Then what do we see from the market ETFs? SPY, QQQ, they were in an uptrend. They are continuing to be in an uptrend, and QQQ is near trendline support. SPY also has trendline support. DIA in the daily chart, it is in a downtrend now. It has lower high, lower low. However, in weekly, it is right at trendline support. And IWM also has trendline support in daily. These trend line supports, memory trend lines, they are not easily broken. And when all the market ETFs have trend line support near the price, Friday's closing price, then it is not possible to be very bearish. So I am not bearish on the market ETFs, and I did take some short trades earlier, but I booked profit in many of them. I might have taken some short trades on Friday, but they are not on the market ETFs. Market ETFs are looking right at support now. So I will not be surprised if it goes up at least in the beginning of the next week. Am I bullish? No, I am not bullish also. Why not? Looking at the market ETF, I am not bullish because QQQ came down with the biggest down move in 3 months. When that happens at pendulum or price extreme high, and QQQ is at pendulum or price extreme high here, when the biggest down move of 3 months happen at pendulum high, that is often a sign of beginning of a down move, not a sign of exertion. So I am not being bullish also. I will wait to see if price can bounce up from all these trend line supports. Then I may look for buying opportunities. There are plenty of fundamentally strong stocks at low price levels. If the market bounces up, there will be many buying opportunities, but I will wait for that. I did not take any new long position on Friday. That is my analysis looking at the market ETFs. Let's look at the market internals. First, look at the composites using Q Global Market Breadth. very broad internal analysis using Nasdaq and NYSE. First, I look at the percentage of stocks above 50 MA. For Nasdaq, it is now at around 40%, and NYSE is in fact below 40%. Now you see how we could see the relative strength changing between Nasdaq and NYSE. If you are watching the webinars regularly, you know earlier NYSE, the yellow line percentage, used to be about 10% higher than Nasdaq. NYSE used to be 10% higher than Nasdaq, yellow line. And in last 1 and 2 webinars, I showed that the gap between NYSE reduced. NYSE was still stronger in the last webinar, Wednesday's webinar, but it was higher by only 5%, not 10%. And now you see that Nasdaq is actually stronger as a whole. Percentage of stocks above 50 MA for Nasdaq is 40%, NYSE is below 40. Not much below 40, but still it is below 40. So instead of being stronger than Nasdaq, NYSE is actually weaker. And if you look carefully, in NYSE it is coming down with lower high, lower low. It is below the 50% level and below the average line. Whereas in Nasdaq, it is coming down. It is below 50% level, but it is above the average line. And the percentage itself is slightly better than NYSE. So from being weaker than NYSE, Nasdaq has turned to be slightly stronger. If you look at the 3-month new high low, since the last webinar for Nasdaq, it actually tilted up, and in NYSE it is continuing to go down. That is also showing the relative weakness of NYSE. That information is useful because until last webinar you could be cautious about Nasdaq stocks, tech stocks. Nasdaq as an exchange may have non-tech stocks also, but broadly speaking, you could prefer NYSE over Nasdaq until last webinar, but now is the time to start preferring Nasdaq stocks. Let's now look at the market risk total view to see if there is sign of weakness in terms of distribution count or Hindenburg. When market is at or near the pendulum high, I am looking for signs of weakness in terms of distribution count or Hindenburg. They are not present at the right edge. So again, I am not expecting market to drop sharply and suddenly because it has not done so before. If we look at the above 50 MA percentage for market the total view, and the total view is comprised of the calculations from Nasdaq NYSE as well as the 4 major indices, that percentage of stocks above 50-day MA is also coming down with lower high, lower low. It's below the midpoint 50% level. It is just above 40% level, just above 40%, and it is below the average line. So this is showing overall the market is continuing to remain weak. Over last couple of weeks, it weakened in terms of percentage of stocks above 50 MA. If we look at the 3-month new high low for this composite chart, that is also coming down, and since last webinar it tilted down further. What kind of stocks are in favor? Growth versus value. That line is continuing to go up, so growth is outperforming. And small cap versus large cap, you may say it is still coming down, doesn't have higher high, higher low yet, so it is still coming down. Small cap is underperforming. However, since last webinar, if you see at the right edge, small cap tilted up. That seems to show that if next week this line continues to go up, that will be the time to buy small cap stocks. And that is also supported by the fact that IWM is right at trendline support in the daily chart. There is a possibility that we may buy small cap stocks next week. Last couple of days, small caps did better than large caps. And IWM is also stopping at trendline support. Market breadth total view and Nasdaq NYC breadth analysis is not showing enough weakness yet. What about Q Edge sector industry stock advanced decline breadth? Sector industry stock advanced decline breadth for 1 month to 1 day. Some time ago, 1 day and 2 day periods were green and I was expecting it to turn to red. That has happened. And all the periods are now more red than green. This was so in Wednesday's webinar also. So no change in that. Overall, sector industry stock advanced decline breadth is remaining bearish, but maybe it has improved a little bit. The red color reduced a little bit since webinar of Wednesday and green color increased a little bit. Overall, it is still remaining bearish, same view as Wednesday's webinar. And if we look at bucket analysis, more stocks are below midpoint of Bollinger Band. 70% of stocks for S&P 1500, that is bearish. On Friday, another 4% stocks crossed below mid Bollinger Band. So Friday was bearish, but it was 4% move, not big enough, somewhat bearish, not large bearish. That is visible from the sector industry stock advanced decline breadth also of Friday. It is bearish but not very bearish. In terms of sector up down also we see the same thing. 5 sectors up on Friday, 6 down, balanced. So it seems market already came down for a few days and on Friday it stabilized. And we saw several market ETFs are at trendline support. We'll see if that gives rise to a reversal upward. That would be expected considering the fact that every other time in recent months market came down for a few days and then recovered to make new all-time high. Will this be a repeat of that? We don't know. There are some warning signs like the biggest down move of 3 months in QQQ and also the fact that price came down with high volume in all the weekly market ETFs, and also we'll see there is weakness in the mega caps that tends to influence the broad market as well. If we look at the percentage of stocks at extreme low and extreme high bucket, none of them are at the extreme level of 30% or more, so we don't expect any reversal from that point of view. Market can go up or down both from the bucket analysis perspective. Q edge overall view is remaining same as Wednesday's webinar. It's bearish, but Friday price stabilized and sector industry stock advanced decline also stabilized somewhat. What about technical breadth? In Wednesday's webinar, when looking at Q Finder, balance between bearish and bullish signals, weekly interval, I showed that it was still bearish, but compared to previous weekend's webinar, Wednesday improved a bit. Why? Because on Wednesday we had reversal signals more bullish than bearish. The other categories were bearish, and that situation is continuing. So if you compare with Wednesday, it might have improved a little bit. If you compare with previous weekend webinar, that also improved a little bit in terms of the cyan portions. Overall, it is still more bearish than bullish. 59% of all weekly signals bearish, 76% strength signals bearish, 64% continuation signal, and 45% reversal signal bearish. Same insight as we had in the Wednesday's webinar. Is there any alert from the weekly bearish headwind? No. The percentage is much below 1%, only 0.2%, and that is expected. The bearish headwinds did go above 3%, then price came down for those stocks. The market came down a little bit, and when that happened, we expect the bearish headwinds percentage to go down. Exactly that happened. No alert is there from that point of view. Weekly, same as last webinar, bearish, but reversals are showing there is a possibility of reversal upward. And daily interval Friday is bearish all across the 4 categories, but not severely bearish. We can see about 60 plus minus percentage bearish across all the categories. There were bullish signals as well on Friday and bearish signals also. Whether you look at breakout, there were bullish as well as bearish breakouts, and go with flow trend following setups, also enough bullish and bearish both direction trades. So Friday might have been a stabilizing day. We'll have to see if it can recover from there. Overall, if I have to choose a preferred trading direction, I am still not able to choose that. If price, that is the market ETFs, can recover from the trend line supports, then my preferred trading direction will be bullish, but I have to wait till Monday to see if that is happening. I don't have any preferred direction yet. When that is the case, let's look at some of the stock ideas I shared recently and see how they played out. By the way, I am taking this Q master class. We already had 2 sessions, and the next session for those who registered, that will be on Monday 11 a.m. EST on options analysis. How to look at options risk profile and decide which strategy to trade, maybe which leg to trade, which volatility to trade, etc. with simple options, naked options, or mostly verticals. That is what I use in my own trading. I'll discuss that using Option Station Pro in Monday's webinar 11 a.m. EST. Now let's look at some of the stocks I shared publicly earlier before knowing the result. One of them was UAA, a consumer discretionary stock. In the daily at that time it was coming down, and I think I identified the stock on this day. Let's check that out from the forum where I shared the analysis before knowing the result as usual. It's good to look back on the forum post to see exactly how the charts looked like when I shared it. And this was the post. It was shared 18 days ago, 31st August. Not many people were bearish, isn't it, at that time, 18 days ago. Now people may be concerned. Now people may be talking about market going down and weakening, but I shared this bearish idea 18 days ago, and I titled it, if you think it is time to look for shorting opportunities, here is one for your consideration. Once again, I was ahead of others, and that was not whimsical, that was based on very robust and real-time Q analysis. How did UAA look like at that time? Q sonar showed it had a breakout short setup, touched trend line resistance and came down. Also had a possible go with flow short setup. It was happening at pendulum high. That was a lucrative location to short the stock. In terms of industry, the industry was very strong earlier, then it was deteriorating rapidly with deceleration. That was a turnaround bearish industry that allowed us to short. And I found this stock UAA, which was overvalued, and on that day 100% of peer stocks were down. That allowed me to short the stock. Lastly, I looked at the technical chart. It had a breakdown as well as go with flow short setup at pendulum high. That was what I shared 18 days ago, 31st August. Let's look at UAA now. I shared the bearish idea on this day. The initial stop loss would be just above the recent high using Q protection signal. Initial profit target would be at the lower boundary. It never approached the stop loss. Hit the lower boundary in a couple of days. You could book at least partial profit at this point, and then it has continued to go down. Q traders would book at least partial profit with discipline, and if you held partial position, you are continuing to remain in the trade. The weekly is looking pretty bearish both in terms of shape and color. There would not be any reason to exit the full position. You could exit full position also at the lower boundary. That is also perfectly okay, because by that time the risk distance was covered. Some traders do that, and some traders like to try to let profit run. If you let profit run on partial position, you could keep an eye on the next trend line support in the weekly, and if price bounces up from this trend line support, you could book profit in the remaining position. If price starts to go up before hitting the trend line support here in weekly, then you could exit using trailing stop in the daily interval. You could use the Q protection signal for applying trailing stop on the remaining position. Where will that be now? This is the stop template. Your current trailing stop would be at this point, indicated by the cyan dots, and your entry price would be somewhere here, maybe somewhere here. So for the remaining position that you may be holding, the trailing stop is below your short entry point. Even if the stop is hit, you would still exit the remaining position with a profit, and if the stock continues to go down, the trailing stop will also continue to go down, giving you more and more profit along the way. That's how you could either book full position profit or at least partial profit and apply trailing stop on the remaining position. UAA exited with profit. Let's look at Facebook. In one of the masterclass webinars, I mentioned about Facebook. And those who follow me, they know that if I'm mentioning a stock, I have some interest in the stock. It created bearish indecision at the top for 2 weeks in a row. Then it created a false upside breakout along the watermark resistance in the daily. And I mentioned it right on the day traffic light turned red. That was the time I took a short position, bearish position using short call vertical. And I also mentioned on Twitter that on this day, after 2 days, you see this long lower tail that actually was almost touching the weekly trend line support. So I didn't wait for the close of the candle. I booked profit in my short call vertical at the lower end of the daily candle, and I could decide that because it was near the weekly trend line support. I exited that trade with about 25% profit. Usually I look for 50% profit for verticals, but I don't want to overstay my welcome period. When you are trading options, you have to be aware of the welcome period. In this case, the welcome period was until price came to the weekly trend line support. So I exited precisely with the help of the weekly support. Then what did I do? Next day, I saw price could not go up. I was looking at Facebook using intraday chart. It could not go up. It was coming down on the intraday fine-tune chart. Let's look at the intraday fine-tune chart. The position that I took first on Facebook, somewhere here, that short call vertical I exited near the low of this day with about 25% profit. Next day, I saw that mega caps were weak again, and Facebook also came down below early range low. This pivot level, mega caps were weak near the open, so I shorted again Facebook and I got a better price. So I exited my trade. At this point I re-entered short call vertical. I don't remember with exactly same strike or expiry or not. I decided the expiry and strike again using Option Station Pro that I'll demonstrate in tomorrow's webinar. But certainly I would have entered with a better price. Then at the close, price closed little bit higher, but that's fine. It was a short call vertical. Next day price came down, and at the low of the day you see there was a bullish headwind signal, and also there were trendline support in multiple market ETFs. So I exited half position of my second entry of short call vertical in Facebook at the low of this day using the bullish headwind and the market ETF trendline supports. That percentage was actually 30%. So I traded Facebook 2 times in last 1, 2, 3, 4, 5 days using short call verticals, both bearish trades. One I exited in 2 days using booking 25% profit, and the next time I actually exited in 1 day using 30% profit. Why I could exit second time with a bigger profit was because Friday Facebook was dropping sharply, rapidly you may say, and when a stock drops rapidly intraday, the short call verticals expand in profit quickly. That's why I could exit the second trade with a bigger profit than the first trade. Let's look at Facebook using intraday chart. Daily weekly chart. Why did I exit half position? Firstly, there was a bullish headwind in the intraday chart, and also I saw it came to the yellow direction line and it was starting to go up. So I booked partial profit. Why didn't I book full position profit? That was because it actually broke the trend line support in both daily and weekly. Because both are broken, I decided to hold on to half position, and my short strike is actually 370. My long strike, I don't remember, somewhere higher, but my short strike is 370, which is above Friday's closing price. I have some profit in the trade. If I see that market ETFs are reversing from trendline support, and if Facebook also regains the trendline support and starts to go up, I'll make sure one of two things. I'll make sure either the remaining position is also closed with small profit, or at minimum the whole trade is closed with a profit. I'll decide which one of those to actually execute depending on how the overall market and mega caps are doing. Now, Facebook was not the only mega cap that actually dropped below, closed below the immediate trendline supports in both weekly daily. I look at Apple now. But before Apple, Apple is a stock I tweeted about on Friday. Before looking at Friday's trade idea, let's look at some other stocks that I shared earlier. I'm not going to look at many new stocks today other than Apple, but let's look at some stocks I discussed earlier. Hawaiian Airlines, and it is very important to look back on the analysis I shared earlier and see how that is playing out. I mentioned Hawaiian Airlines around this point and specifically told that Q traders would not like to buy the stock unless it could broke above the trendline support. I did take some intraday trades on this day using fine-tuned chart and close them with profit before the close of the day on that day. That was because it could not break above trendline support, and on Friday I was watching, tried to break above, not support, it tried to break above trendline resistance, not support, tried to break above trendline resistance, but again Friday also it closed below the trendline resistance. It has two indecision candles in a row. We'll see if next week price can open above the trendline resistance and then continue to go up. That may give a nice breakout setup right at the open. We can see in the weekly displayed bearish headwind, not bearish, in the weekly displayed the bullish headwind near the bottom, and this is the first week where the backdrop color has turned bullish. So this is a stock I am tracking, very strong fundamental stock. If it can open above trendline resistance on Monday and continue to go up above early range high, that may give a low risk entry point using precise or fine-tuned chart. Now HA, again I shared it first at this point and we are still tracking. So Q traders would not like to take a trade unless it has a confirmed setup, and we don't have the breakout setup yet. And compare that with another airline stock that I shared, SKYW, SkyWest. I shared it as a go with flow as well as I think pullback setup on this day when we had the cyan candle, bullish flow candle after creating higher high, higher low. I took a long position at that time and I mentioned to one of the Q traders, for SKYW, very fundamentally strong stock, and technically it is certainly stronger than Hawaiian Airlines because it already created higher high, higher low at this point, whereas Hawaiian Airlines was still waiting for a breakout. So this stock broke out of the range on this day already quite a few weeks ago, whereas Hawaiian Airlines is still trying to form this breakout. That's why technically SkyWest was stronger, fundamentally very strong. So when I traded SkyWest, I was okay to hold it for longer term if I had to. I used short put. I didn't use short put vertical. Short puts would give highest profit, much higher than short put vertical if the stock went up and I was bullish on the stock. So I used short put, and by Friday that short put had more than 30% profit. We'll see how it plays out next week. However, once you have more than 30% profit in an options trade, you will not let it turn into a loss. Both HA and SkyWest played out exactly as one could anticipate using the Q technique. Now, two stocks after that I discussed, those were on the bearish side. One was CMCSA, Comcast. I discussed the trade on this day. Yes, it had a very long bearish candle Normally one would not like to short on that very bearish candle because stop would be far away, at least not using stock. So I kept note of that. I didn't short at the close of the day. I could short somewhere in the middle, don't remember here or here, but still I didn't want to short it with the stock. It did display the biggest down move in 3 months at that time. Remember, QQQ is displaying this biggest down move in 3 months on Friday. So that was happening near pendulum high, just as it was coming out of pendulum high. Those are usually not a sign of exhaustion, but beginning of a down move. So I decided to take a short trade. In this case, I used short call vertical. And though price recovered somewhat, the traffic, okay, sorry, the bongo color turned red. Traffic light from red turned yellow. Thursday had a doji candle. Friday has a bearish shape or mixed candle. So it recovered somewhat on Wednesday, Thursday, Friday, but because I traded short call vertical, I structured it in such a way that I had about 1:1 reward risk ratio, if I remember correctly. The trade is actually having a small profit at Friday's close. And it is looking bearish to me. We'll see how this short call vertical on Comcast plays out. It has enough number of days before expiry. The other bearish trade I shared, I think on the same day or around the same day, was Morgan Stanley, MS. I shared it on this day when it had bearish go with flow setup, possible go with flow setup. Strictly speaking, no, because it was not in a downtrend, but it did break below trend line support on that day, so it gave a breakdown short setup. The breakdown happened with bearish pressure. That was the day I shared the short idea. In fact, I titled it that there are so many bearish signals, it is difficult to find a bullish signal that will tell us not to short, something like that. So I was quite comfortable sharing the text like that. Let's look at the post here. Looking at all the Q analysis, I was comfortable giving a title like this. There are so many reasons to short this stock, it is difficult to find a reason not to. That was based on the 360 degrees analysis. Again, let's look at them. This is what I saw and shared in real time. It was having a false move that was bearish. False move means tried to go up, that was a false move and came down, and the false move was big enough to create a reversal candle. It had bearish pressure, bearish breakout, bearish flow, Mobo breakout, Kahuna. That was happening at pendulum high. Relative performance was down. Many sonar bearish signals, and in terms of industry, it was much stronger earlier and then weakened. So the industry was turnaround bearish candidate, allowed us to short. Looked at the stock, it had negative earnings growth and medium valuation. 95% of peer stocks were down on that day. It had declining year on year quarterly earnings growth, also revenue growth. So there were many fundamental reasons to short the stock, and technically it had plenty of signals. Bearish release, bearish indecision at the top, bearish backdrop, bearish shape, bearish flow, prior to that bearish headwind, bearish breakdown in daily, bearish shape, bearish pressure, reversal at pendulum high, biggest down move of 1 month. Let's read from the bottom. PSAR reversal, Mobo breakout, Kahuna. bongo turned red. Plenty of technical bearish signals, and you could short right at the time it broke below trendline support. In fact, if you look back, once again the bearish headwind caught the very top, and this would be the first day you could think of shorting it using Q techniques. Very precise entry in my view. Precise doesn't mean guaranteed profitable, but precise means that was the first day you could possibly short it. And if we look on live charts, this was the day I shared the short idea. Again, I shorted Morgan Stanley using short call vertical. Friday's candle, bearish color, bearish shape, extreme high, bearish volume, backdrop, bearish color, bearish shape. So I'm continuing to hold the short call vertical in Morgan Stanley with a small profit. Now, one mega cap that I tweeted about on Friday, Apple. Now, if you look back, I first talked about Apple right on the day the weekly displayed a bearish headwind, and that was the day the QQQ also displayed bearish headwind, and that bearish headwind once again could catch the very high in Apple. How many people could anticipate a decline right on the week it was creating a new all-time high? I think not many, but we have some very powerful signals in Q systems. So that allowed me to, in fact, short Apple. I mentioned it earlier. I booked profit along the way. Fundamentally, it was a very strong stock. I shorted it somewhere here. I don't remember. I shared it in public forums, either YouTube or Twitter or my forum. I booked the profit. And on Friday, I saw that it was one of the weakest mega caps. Facebook is another mega cap. I have a short position in Facebook, as I mentioned. If you look at the mega caps on this small sonar, on Friday, Facebook was the worst performer of the mega caps. So I booked partial profit, but I am continuing to hold partial position in Facebook, short call vertical. And Apple was the second worst performer among the mega caps on Friday, and it quite decisively, I may say, broke below the trend line support, closed right below the yellow direction line. If you look at the momentum chart, it closed below the 50-day moving average. Bearish shape, bearish color in daily, relative performance sharply tilting down. Bearish shape, bearish color in weekly. Next trend line support is far away. We have a Mobo, sorry, not Mobo, this pocket pivot. We have a bearish pocket pivot on Friday, and in fact, we have 3 bearish pocket pivot in 10 days. Successive pocket pivots. Very high bearish volume on Friday, bearish pressure on Friday, and price is just coming down from pendulum high. It had the biggest down move of 3 months a couple of days earlier. Remember again, QQQ displayed this on Friday. After that, after the biggest down move of 3 months, Apple is continuing to come down. That's why I mentioned when this biggest down move in 3 months happen in a stock at pendulum high, that is often a sign that more weakness is to come. It's not a sign of exhaustion. So now it broke below trend line support. Earlier I shorted it, I booked profit along the way, and on Friday I took another short call vertical. Again I structured it with about 1:1 reward risk ratio. I gave enough time. I will try to exit with at least some profit, and if it comes down, good for me. I'll try to book profit either at the trend line support in daily, the weekly support is also there, or at reasonable percentage profit, maybe 50 or maybe even 40-30%, depending on how the whole market is doing. That is how I am positioned now. based on what I shared publicly, SkyWest is one stock I shared bullish idea. If you took the trade, you are continuing to hold on to the position. I had 30% at least profit by Friday on the short put vertical. Depends on no, short put vertical, not short put vertical, just short put. Your percentage profit would depend on what instrument you used. Facebook, I'm holding a short position, short call vertical, bearish position with about 25% or so profit at the close. And Apple, I took a new short position on Friday. I have some other positions also, like MS and CMCSA, Morgan Stanley Comcast, both bearish positions. So as you can see, I have positioned myself bearishly well ahead of others, and I shorted stocks, or I took bearish trades in stocks that were looking weak using real-time charts. Next week, I'll see if the market is going up from weekly and daily trend line supports on the market details. I may take some long trades. Maybe I'll try a long trade in Hawaiian Airlines that I'm tracking for a long time, couple of weeks. If it breaks above the trend line support, I will be, again, not trend line, it breaks above the trend line resistance, I'll be looking to buy Hawaiian Airlines. Again, my market preferred trading direction is neutral. I'll decide the preferred direction based on how the market is moving next week. Once again, I went through the ideas that I shared publicly before knowing the result, reviewed them, both the charts I shared when I first initiated the ideas, and then looked at the charts today as of Friday's market close to show how the trades are playing out. The more you follow this Q technique, very powerful 360 degrees technique, the more you will start to have more and more confidence on the technique and will be able to trade, I think, profitably. Let's end today's session here. Next session for registered traders will be on Monday, and for the public will be most likely on Wednesday. I look forward to seeing you in the next session. Thanks for joining me today. Have a wonderful weekend, and as I always say, no reason not to do that. Trade profitably. Thank you.